Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka, and my colleague here,
Yatin Mota.
Well, I think it was a 6th straight day of gains for the sensex, Yatin. Nifty as well was moving in a range-bound manner, so to say, within a 200-point range, mind you. But we ended above that 23,550 mark. Broader markets continue their outperformance, with the Nifty mid-cap index outperforming. The small-cap index is also up in excess of 0.5% or thereabouts. So, broader markets have steadied after yesterday's fall. India VIX has also, eased off by 3% or thereabouts. The advanced decline ratio was also in favor of gainers. On the NSE, the advanced decline ratio was at 3:2. Banks, of course, extended their gains. You had the likes of HDFC Bank, ICICI Bank among the top contributors on the Nifty today as well, Yatin, for the 3rd straight day. Aside of that, Reliance also did well. That was also among the top contributors on the Nifty. What didn't do well was the PSU banking pack, Pharma as well as autos. These three pockets were under pressure. Realty also, mind you, has managed to stage a comeback after yesterday's drop. IT, Yatin, recovered after rupee hit a record low against the dollar. So IT just about managed to come off day's low and end, I think, marginally in the green. In terms of gainers, metals were shining bright. So you had names like Hindalco, JSW Steel, among the gainers. I think even Tata Steel was among the gainers today. Vedanta was up and about of 5 to 6% gains coming in there. That's of course not on the Nifty, but among the metals, that stock was also doing well. Aside of that, you had Grasim, BPCL, Adani Ports. These are some of the other movers. On the flip side, Pharma as a pack was not doing well. Of course, regulatory concerns for Sun Pharma, which is why it was among the top Nifty losers. Hero Motor was the top Nifty loser, and other auto names like M&M were also under pressure. NTPC, SBI and HDFC Life, these were some of the other losers. But Yatin, there is no stopping the fertilizer pack, right?
Absolutely.
And even chemicals as a pocket was doing well today.
Absolutely. And on fertilizer, I will talk on detail. But yes, on an average, 10-15%, 20% gains coming in for a few of these fertilizer names. Obviously, a lot of reasons that we'll be discussing in the show. But MapMyIndia, Nandita, that is one stock which moved, and you will be talking about that. Right. But brokerage note clearly putting some cheer to the stock of MapMyIndia. What was not doing well in the market was PNB Housing, and after that block deal which happened close to 790 rupees per share, that stock fell nearly 6% in trade. We also had PFC, that stock moved 3.5% lower in trade. We have some profit taking in BSC, Ujjivan, Hero Motocorp, Engineers India. All of these stocks are down anywhere between 2 to 3%. Apart from the fertilizer pack, stocks like we have TVS Supply Chain, that stock moved 8%. Prestige Estates, after announcing that fundraise, that stock is up 8%. India Cement was up 7%. City Union Bank, JK Paper, all of these stocks were buzzing on the back of strong price and volume action. Nandita.
That's true. Quite a few high flyers in the mid-cap end of the markets. But with that, let's take a look at the top stocks that are on our radar. The first one, Yatin, Sun Pharma, an index stock. Once again, regulatory concerns are back to haunt the company. Dadra facility was already classified as official action indicated by the US FDA back in April. And since then, the stock is down somewhere around 8%, even though, if you look at the 6-month returns, it has given positive returns of somewhere around I think double-digit returns, so to say. But since this Dadra facility has come under the US FDA scanner, we've seen the stock, going downhill. Dadra facility, of course, has received a US FDA warning letter. In fact, the regulator has flagged off concerns with regards to violations of current good manufacturing practices. And the contents of the letter has not been made public, but US FDA will do that in due course of time. Now, as I mentioned, the unit was classified as official action indicated back in April. The plant itself was inspected somewhere between December 4th to December 15th in 2023. It got 6 observations from the regulator at that point of time. But if you look at the contribution that's coming in from Dadra unit, it's somewhere around in low single digits. and this particular plant manufactures oral solid dosages. In fact, it also is expected to manufacture Revlimid generic, which is a key contributor to sales for players like Dr. Reddy's as well. But this is not the only plant that is under US FDA scanner, right? You have other plants like Halol unit, that got an import alert back in December 2022. You have Mohali plant that was also under US FDA scanner. So till the time these issues are resolved, I think it'll likely to be an overhang for the stock. However, I think I was listening to a pharma analyst on CNBC today, Nandita Khemka, and he pointed out that people really don't know the launch pipeline from these units. There's no clarity on that yet. So he expects the impact of Dadra facility overhang to be not more than not something to really worry about.
Correct.
Marginal. So let's see how things really pan out. But 3 units under US FDA scanner, so I think that overhang will be there for some time.
Yeah, and I think earnings wise, US generic makers, as which is the Indian companies who make generics for the US markets, haven't done really very well in the past 1 or 2 year scale. They've underperformed the indices, but yes, the last 6 months have been good. But then again, we have the US FDA clouds coming in, but the clouds in the sky are good for fertilizer stocks. Above expected better monsoon could bring
sunshine, not there no clouds.
No, the clouds get you rainfall, so the rainfall, which is good for fertilizer. That is what I'm trying to say. So clouds are good for fertilizers, and that is what is exactly happening now. The rainfall is expected to be better because the last 2-3 years we had the El Nino effect, and now we have the La Nina effect. And usually in years of La Nina, we have above average monsoon. Now, obviously the monsoon progress is slow, but a lot of government initiatives are coming in for the fertilizer sector. Now, the government is proposing to cut GST on fertilizers to 0% from the current 5%. This helps higher consumption. So, this will reduce the cost of fertilizers and probably spur consumption. That is point number 1. Obviously a proposal, but still working as a sentimental positive for the pack. We have the cabinet decisions which happened in the past few weeks. Number 1 was PM Modi releasing 20,000 crores as the Kisan Samman Nidhi to farmers, which again probably boosts the overall sentiment in the farm sector and fertilizer sector. And also MSP has been increased by a few percentage points recently. Obviously the proposal is also to bring gas under GST. What this will do is reduce the cost and reduce the working capital requirements of fertilizer companies. And again, that is one proposal which the market is looking forward to. But the reason why RCF, Chambal Fertilizers, Coromandel, all these stocks were up was to do with the fact that nano urea is doing its work. Government has set a target of FY26 to completely reduce dependence on imports of urea and become self-sufficient. They want the ramp up in the nano urea space, which is a liquid urea. Companies like RCF, Coromandel have been developing various variants of nano urea, which is doing well in the marketplace. And not only that, Minister Mansukh Mandaviya recently said that the total number of plants producing nano liquid urea will increase to 13 in the current calendar year from 9 at present. So good expansion plans, GST, some reforms in the fertilizer sector would probably be something which is keeping all of these stocks in strong momentum.
Strong momentum it is, and third straight day of double-digit gains coming in on some of these stocks. Let's see what happens next week after the GST meet outcome as to whether they come under profit booking or it continues here on. But the other stock that we've been mapping is MapMyIndia. That stock was among the top performers on the Nifty 500 index today. Of course, a 20% uptick coming in on that stock, buoyed by the kind of outlook that has been given by Goldman Sachs. It has initiated a buy call on the stock, target price of 2,800 rupees per share, which indicated a 40% upside from yesterday's close price. Today it was somewhere around 2,400 rupees or thereabouts. But Goldman Sachs believes that the company is well poised to benefit from the early leadership position that it enjoys in the fast growth end markets. And of course the company has been an early mover in terms of India's digital mapping ecosystem. It has mapped nearly 18 million locations in the country and captured somewhere around 15 million addresses. That's the kind of scale we've seen on MapMyIndia. But it enjoys 80% plus kind of market share in the auto OEM navigation software. And Goldman Sachs says that it expects revenues to grow at at a CAGR of 38% over FY24 to FY27. Remember, the company has also laid out an ambitious revenue milestone of 1,000 crore rupees by FY27 to FY28. So perhaps that could be within reach, the kind of forecast that Goldman Sachs has given out. But it also expects steady EBITDA margin growth in the range of 38 to 41%. Now, if you talk about the open order book of MapMyIndia, it's at somewhere around 1,400 crore rupees, which is executable over the next 3 to 5 years. The key drivers will be, of course, pick up in winning new orders. It has recently won orders from Hyundai and Kia Motors worth 400 crore rupees, I think back in Jan. And the growth acceleration in the Internet of Things, IoT business. Its IoT business in FY24 saw a growth of 90%. And the company also expects IoT business to grow somewhere around 10 times in a 4 to 5 year time frame. So that's the kind of growth they are looking at when it comes to that particular business. That is expected to be the growth driver for the company, right? But if you look at the valuations, Goldman Sachs has pointed out that the stock is trading at a forward PE multiple of, I think, 53 times. So that, I think, even Moneycontrol Pro had done a story as to how valuations could be a concern. But the stock has already doubled in the last 1 year, Yatin. However, if the kind of revenue trajectory that they have laid out, 1,000 crore by FY27, FY28, if that happens, who knows, the stock could go higher from here, Yatin.
Absolutely, and the massive market share that they have in the GPS systems in most of the cars and the tie-ups with OEMs, including the likes of Maruti and Hyundai, have been working well in the past, and probably that will accelerate the growth to a larger extent. They are also doing various other projects, including projects for government, which will be a key driver to watch out for. 20% up, C Infosystem, which is MapMyIndia, on your screens after this Goldman Sachs initiating coverage report. With that, Nandita, it's a wrap, and tomorrow it's Friday.
Yeah.
Last day of the working week.
But Saturday is important. We have the all-important GST meet.
Yeah,
right? So,
GST meet is there.
Yeah, I was talking to Ajay Srivastav the other day, market expert, and he said that more than the budget, all eyes will be on the GST meeting because of the kind of things that they have on the agenda.
Absolutely, and we'll watch out for that. Stay tuned to Moneycontrol for all your business news and updates. Thank you so much.
Thank you.